Welcome to today's session with of Fridays with Finance. It's the first session for our November edition. So let's begin. Our topic for today is why, how, and what of finance. First, I'll briefly run you through the main topics for discussion today. First of all, we will be discussing about the main income sources for ISEC in Mumbai, as well as we get to know more about the budget. Why is a budget important? How is a budget made? And after this, we will move on to the different heads of budget as well as investments. Moving on, we will discuss about how accounting is done in ISEC in Mumbai, as well as the auditing process for us. So, the two main sources of income for our LC are, first of all, the amount that business development raises, as well as the income that we get from operations. So that mainly includes the fee that we get from our EPs as well as clients. Now, since we are an NPO, we don't have to declare a dividend or pay salaries. So once our income is generated, 80% of that is reinvested back into operations to boost operations, that is boost exchange, and 10% is kept as savings. The other 10% of the income is kept as a reserve. Now, savings act as a working capital, whereas reserves act as emergency funds. So you may have this question that why do we need a budget? So a budget acts as a roadmap and is required in order to do financial planning. If you don't have a budget in place, you will not know how much income is your organization going to get. If you do not know how much income you will get, you will not be able to plan for your expenses or your investments. A budget is also important for the sustainability of an organization. Okay, so before I move into explaining how a budget is made, I just want to clarify that we got a lot of queries regarding where all the money goes, the money that we get as income, where does all that money go? So we have a particular session, which is the third session of this edition, which will mainly talk about how this money is utilized and what are the main expenses and investments that we make. Okay, so now we move on to how a budget is made. Now, first of all, in order to make a budget, you need to know the targets of every front office department. So, and you also need to know this target with the breakdown of it month-wise. Once you have complete information about the targets of the front office as well as the target that BD has set for itself, the amount that they're going to raise, you need to apply the pricing and which will give you the total revenue that you are going to get. Now, once we know how much revenue we are going to get, we allocate this under 5 different budget heads. So before that, I'll just explain the process that I just told you about. So take for example that the target for OGCDP for the month of January is to create 10 customers, get 5 matches and do 2 realizations. Now we apply the pricing to this particular target. And as we know that we apply a rate of 6,000 rupees for a customer when a customer is created, he or she pays 6,000 rupees. And at the time of match, we get 9,000 rupees. So applying the rate, I would do 10 into 60,000, 10 into 6,000, which would give me 60,000, and 9 into 5,000, which would give me 45,000. Since we do not charge anything on realization, the income for that particular thing would be nil. So the total revenue out of this would be 1,05,000. Now this is a very simple example, but what you actually do when you make the budget is do the same thing with the target of all the months and all of the front office departments. So as I had mentioned earlier, we have 5 different budget heads. And the first budget head is the operational budget. Now the operational budget is mainly divided into the income and the expense. After this, we have the marketing budget. Now, marketing budget includes all such things as, investment into, say, LinkedIn or automation, digitization, or getting flyers printed, all of that. Third is the business development budget. This mainly includes sales training, expenses for printing, etc. Now, the talent management budget as well as the administration budget are fixed costs. So even if the LC stops doing operations, we will still incur this particular cost. Administration budget includes all such things as office rent, charges that we pay for Wi-Fi, as well as auditing charges. So let's move on. Now I will explain about accounting and how do we do accounting in ISEC Mumbai. You can read the definition that is there on the screen of accounting. I think it's pretty self-explanatory. So the VPF needs to maintain 4 main books, and submit these books to the MC office, that is to ISEC India office, every 15 days. So the books to be maintained are invoices, receipts, payment vouchers, as well as bills. So I will explain how accounting was done earlier. So earlier, all the LCVPFs would do accounting completely by themselves. There's this software for accounting which is called Tally, and before 2014, all the LCVPFs would do Tally on their own, and this created a few problems, such as it created a few discrepancies. So for example, if I am sending the LCP of my LC for an international congress, I may count it as under a TM expense, like a TM investment. But some other LC who is doing the same thing may count it under OGCDP, because probably the LCP is going to crack an OGCDP IR when he goes for the international congress. So that's why it would cause a lot of discrepancy, and that's why we got something called the standard chart of accounts, and this has standardized the complete process. So now what happens is the LCVPFs no longer have to sit and do Tally themselves. What they do is the 4 main books that are maintained are sent to the MC, and the MC has a full-time accountant. This accountant does Tally. So as you can see, like there's a picture on the right of the screen. So earlier the thing was, because LCVPFs would do Tally, this would hinder people who are not from the finance or commerce background to do finance. So once this was brought in and LCVPFs no longer need to do Tally, it's much easier for someone else who is not from a commerce background also to pursue this. Here again, you can see the definition that is given on the screen. So auditing, it mainly is, we do 1 external audit per year. And so as you know that the financial year is from 1st April to 31st of March. Now we need to do tax filing every year by 30th of September. So in order for this to happen, we have 1 external audit that takes place before 30th of September, and this external audit is done by the MC auditor. Now, who is an auditor? So auditor is a person who is a certified chartered accountant, and he is basically someone. So see you at the next session of Fridays with Finance. Thank you so much.